Hi, welcome to Squirrel's monthly housing update. I'm David Cunningham, standing in for JB. Hey, today I'm going to cover four things. The first is what's been happening in the economic side of things in New Zealand and overseas. The second thing is what's the impact of those economic things been on wholesale interest rates. The third is the impact of those wholesale interest rates on retail interest rates, in other words, what we pay for our home loans. And fourthly, what's happening in the housing market overall, what's the state of the market. So firstly, economically, probably the big news in the last little while has been quite a strong GDP number. That's gross domestic product, a measure of growth in the economy. So that came in for the June quarter. Now it's September, almost the end of September, so it's old data, but it was strong. And the other thing was the March quarter result was revised up from -0.1 to 0. So we're not in a recession, great news, but really nothing much has changed. But that strong read in GDP led to a bit of a rise in wholesale interest rates in New Zealand. In other words, the forward expectation of what's going to happen to the OCR. So we saw those rates rise by about 0.15%, and we've already seen that flow through with Kiwibank passing that on in their one-year home loan rate, which has risen from 6.99, which was absolutely market leading, to 7.15, which is still market leading compared to the big banks, and ASB's at 7.45. Overseas, we've also seen a bit of sentiment in terms of rates higher for longer in the US and other places, and that's also flowed through into interest rates. So really what we've now got is half the market calling for interest rates to have another OCR lift, and half of economists calling for them to stay here for a while and then fall. So the point I'd make is that the expectation of a higher OCR, which is announced next week, not expected to change, but the expectation of a higher OCR later in the year or early next year, is already built into the interest rates on home loans. So I think, again, interest rates have risen, they're probably not going to go much more. The other thing I wanted to talk about was what's happening in the market. There's some startling change if you look over a long period. If you go back to 8 years ago, first home buyers only made up 1 in 10 of all loans that banks were making. Today it's 1 in 4. So we've just seen this gradual increase consistently over the last 8 years. So great news, because what it sort of means is, firstly, more New Zealanders are getting into their first home, and secondly, the number of houses has increased significantly, and so more homeowners, fewer renters, because that's been at the expense of investment property. So those trends are continuing. I think the potential change in government and the change to interest deductibility in the upcoming election could see that proportion of investors sort of go up. So probably a good time to be, if you can afford it, looking as a first home buyer at buying your house now, because I think we're going to see the emergence of investors back into the market over the next 6 to 12 months. That's it for this month. We'll catch you again soon.